Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Rocket Lab, ticker symbol RKLB. And so here I am recording this on Thursday evening, September 26th, after Rocket closed on the day at a price of $8.69, being up almost 1% on the day, but that is after it going up over 13.5% on Wednesday, the 25th. So, looking pretty great here. And, the really big reason why I wanted to follow up on the ticker is because the last time that I did a video on Rocket Lab, I believe was on September 6th, when we hit a low on the day of $5.74. And during that video, I had suggested that I thought, or I said, that I thought price would be coming down to around $5.50 for a couple of reasons. And, I think there's a really good reason, a good lesson in this, and, something that I did wrong with that. And so I justified price coming down to $5.50, partly because it seemed to coincide with the golden pocket here, which Rocket Lab had previously retraced to. If we look at this run up, price dipped down to that golden pocket before running up. So I thought, the same thing might be happening again. And also because there is this yellow downtrend, which looks like, it was the top of this very notable resistance that we had broken out from. So I expected price to return to that level before, finding its footing and taking off. And, the big mistake that I made with this is, let's say my target is $5.50, like it was. Maybe price doesn't go down to that level. And so I need to prepare for, really three scenarios. One scenario is when it comes down to exactly $5.50. That is great, but that's not the perfect world that we live in. It's either going to go above or below. And so in this scenario, when the price, came down to the low of 574, that corresponded with the 50% retracement here at 578. So a better strategy would have been to say, all right, I'm going to establish a quarter of a position at that level. If it goes lower, if it goes to my target, $5.50, add to that a half a position, so I would in total have 3/4 of a position. And then if price goes lower than the level that I expected, 550, and actually comes to fill the golden pocket here, coming down to around 535, then get that other quarter of a position. And so that way, if price does come past my level, I got a full position at a low average, and I'm happy. If it comes exactly to my level, I got half a position, or actually 3/4 of a position there, so I feel pretty good about that. But if I'm wrong, and it only comes down to this 50% level, at least have a quarter of a position. And so, I didn't do that, but I think there are some really nice lessons to learn with this. Also, with this gap to the downside at $4.77, gaps don't always get filled. And I think oftentimes a lot of people will be waiting for gaps to be filled only to be left behind and then FOMO in at the top or, something like that. And so I think that there are just a lot of things that, I was waiting for, and I should have had a better plan, which would have included getting a quarter of a position at $5.78. But, you got to move forward, and I think we can also move back to look at some of these levels that we have previously hit and, how we might be hitting some of them right now. And so one thing that we can do is this retracement here. I believe I went over that in the last video when I talked about price getting up to, 685.4. That is the 1618 from this Fibonacci retracement. And, I believe I recall, also talking about price possibly getting up to $8.50, which is the 2618 here. And so, from this retracement that I did, we did go up to the 1618 before pulling back to the 50%. And now we are at just above the 2618. So, maybe there is some resistance there. Maybe now is the time to be cautious about it rolling over. But, just like this light blue retracement that I did over here, I can do another retracement from the high here to the low here to get an idea of some levels to the upside. And so I've actually already done that retracement. I'm just going to bring it into picture here so we can see it. It's a nice light yellow. And we can see that the 100% was 736. We did consolidate there, formed a bull flag before moving to the next level, which is a pretty nice match with the 2618 here, the 1618 being at a price of $8 and about 36 cents. So currently we are above both of those levels. And this would be the exact same type of move that we saw over here, going past the 1618, but then rolling over before pulling back, finding some support, and then moving higher. And so, there is a possibility though, that I'm wrong and that this does go higher, and I could see it maybe getting up to like $10 a share. That is the 2618. Also, that is a psychological level, moving from the ones place to the tens place, getting the double digit in there. And so, maybe we do move up to that. So there is quite the possibility with that. Another thing that I can do is, rather than a Fibonacci retracement, I can do a Fibonacci extension. And so with that, I'm just going to take that tool, go from the low here, which was $4.20, up to the high at 736, and then back to the low. And I'm just going to make sure those levels are right before we start jumping to conclusions here. And those look good with the low here at 574. And so we can see the 100% Fibonacci extension from that move is at $8.90. We wicked above that level today, hitting a high of $8.98 before closing below, like I said, at $8.69. So, I think we could be putting in a top here, so I think it's pretty good to be cautious of that. But I also think that we could, as always, go higher. And, really those levels to the upside, I think, just $10 a share is probably the next leg up. And then one thing that I also wanted to do with the chart that, is probably nothing, but I just wanted to throw it up here just to have it on the chart, is I'm just going to do a ray drawn from the low over here from May 29th, kind of arbitrary there. And then I am just going to connect that with this pivot high at 736. And so you can see those 2 points there, with this low being at $4.15. And so from that, we can see that price got up to exactly, that level. Like I said, maybe there's nothing there. It does look like, it was a little bit of resistance over here, but it does seem like kind of an arbitrary pivot point over here. So take that with a grain of salt. But I do think that, we are going to be forming some tops, forming a trend line at some point. And so maybe this is it, maybe it's not. But I do think that we could be pulling back some. And, so I'm just going to do one more Fibonacci retracement that might suggest some levels to the downside if we do start to find a top right around $9. I'm just going to draw a Fibonacci retracement from the bottom there to the top so we can get an idea of some levels that we could be pulling back to. I'm just going to adjust this so it's right on the penny there. And so now we see this retracement. And so, if we were to do the exact same kind of retracement that we did here, that was coming to the 50%. However, the last time I expected us to come down to the golden pocket here. We didn't. We bounced at the 50%. So let's say maybe we don't come down to 736. Maybe we come down to 774. And that is the 382. Just above that is the 236 at $8.22. So maybe we pull back to that, but that's not really much of a pullback. So I could see this coming down to 774 if we are putting in a top here. And I think there are some reasons down here that might suggest that we could be putting in a top. One is that if we look at the RSI, that is at 76.57. And so the last time that we were around that value at 78.16 here on August 19th, that is when we hit this top. And so I do think it is quite possible that we are putting in a top with that RSI. And if we look at the MACD, that does look pretty green, pretty positive. So it might be rolling over soon, maybe pulling back to, like I said, around 774 or 70.75. And then another thing is just that the volume, while we have been pushing higher, it does seem notably lower than what it was over here. So maybe we have lost some steam or are losing some steam. So I do think it's good to be cautious. But, I think that another thing we can do is look at some of the unusual whales options data, which I like going over because I think it's just additional data that might suggest which direction the stock might be going in. And so here I have Rocket Lab pulled up here. This is the premium relative to the price in yellow, but I'm not really too interested in that. What I wanted to look at are some of the higher volume contracts that are down here just to get an idea if there's more bearish or bullish sentiment. And for the most part, what I'm going to be doing with these contracts is I'm going to be considering the ones that expire at least October 18th or later, just because for me, I might get tempted to buy one of them if it's dated sooner, but I don't like to go within, on the weekly contracts, I'd prefer to keep it on the monthly. And so the next one is October 18th. And so a number of these, actually the highest volume contract that we have up here is expiring on Friday. So that's going to be tomorrow, as I am recording this on the 26th in the evening. And so that contract strike of $9, it looks like still there were more buys or more on the ask side today than, with previous contract. Than relative to the ones that are selling. So I do think that looks pretty good. But, it is also pretty risky with this, being tomorrow. The next contract that was most popular expires on November 15th, and that is a strike of $11. That, however, was more on the bid side. So that suggests more people were selling. So that could be a topping signal. Even though it's a call, if people are selling the calls, that means that they think either the top is in or, they're just taking some risk off the table and, offloading some shares. And this also doesn't have too much open interest considering that, it's more than a month away for the expiration, whereas the one for tomorrow, that's got a pretty good amount of open interest. Let's see. We also have the $9 call for January 17th. That is about neutral as far as bid and ask goes, so doesn't really stand out too much. Again, the $11 strike, with this being January, more on the sell side, on the bid side, so that doesn't look too good there. One that does stand out to me as, having a lot of open interest is this strike, the $8 strike expiring on October 18th. So that's actually a pretty interesting one because, this is in the money. And so there's a lot of open interest. However, if we notice that, the majority of the ask bid volume was on the bid side, so suggesting that there are sellers. So that is not looking so good, especially, with the price being in the money right now. Good to take that risk off the table. And so I think that's what people are doing. And then there are a number of other contracts here. Let's see, there's this put. This was more on the buy side today, although it is pretty close to neutral there with that. With the majority being on the ask side. This does expire tomorrow, so very, very risky. And that's a put that's out of the money, $8.50. So that does suggest that those who hold this are expecting price to go down tomorrow. And then the only put that I really think is worth paying attention to, the only other one that's up here is the one that expires on November 15th. That is a $6 strike, and the majority were on the buy side. However, the open interest and the was not really that big for that contract. However, the volume traded today, which is more on the buy side, was larger than open interest, and so that is a notable, unusual activity there. So maybe there is something there that could be suggesting that a top is in. So I am actually intrigued in that contract. But if we do look over at these over here, let's see, the $6 put. I was just talking about that one. Let's see, this is an alert that was sent out, unusual whales, because of, let's see, the volume has exceeded the open interest. So this one, sparks my interest. that we can see that the volume has been increasing over the past couple days. And it does look like, with the majority of these being on the ask side, very few on the bid side or sell side, the open interest is going to be above 1,000 tomorrow. So that is pretty compelling to me. Other ones that stood out, let's see, this one that was a number of sells, November 15th, $11. So let's see, that is going to be right here, I believe. And we can see this massive sell order. This was for, over 2.6 thousand contracts, and all of them, actually, this was representing about 2.5 thousand contracts, all of them on the bid side, so all of them being offloaded. And if we look back the past 7 days or so, we can see that that contract was picked up. Maybe it's the same person, maybe it's not, but it does look like, candle volume here of 2,500, and then those being offloaded here, 2,500. So that could, maybe that was a mistake of a trade, but it did not continue the premium going up. It's actually pulled back. So yeah, I think that this does suggest it could be topping something like that. Let's see, November 1st expiration. This is the same type of thing. Buy up here, sell down there. So that doesn't really look too good. We also have the $9 strike. This looks kind of mixed here, buys and sells, mixed, most being on the bid side. So that does suggest that this could be a top right around, the current price as of yesterday on the 25th. So, that's prices trading around that. That's the contract premium right about there. The $8 strike over the past few days. Let's see, over the past week, we can see that the bid volume is pretty close to the ask volume. We got the mid and the bid being about the total of the ask. So this does seem like it's a little bit neutral. So yeah, I must say I am intrigued by the $6 put with the November 15th expiration. Do I think price is going to be pulling back to $6 a share? That would be coming down to right around where the cursor is. No, I talked about price coming down to around $7.75. And so, with that being said, if we do consolidate up here a little bit, I would look for that to be, followed up by some volume and a move up. But I suspect we will be pulling back, rolling over like we did over here. And so it might be a nice time to consider, at least for myself, picking up some of these puts that are dated, with an expiration of more than a month away. And they're only about, $10, $15 per contract, or 10 to 14, 15 cents per contract. And so I think that, this does look pretty intriguing to me. But anyways, I'm sure that you're not all that interested in the unusual whale stuff, but I just think it's some really useful information, some data that, in my view, does support the thesis that this could be topping and that we might be pulling back, not necessarily to $6 a share, but, like I said, at least to $7.75. So good to be considering that after, we have had, almost forgot to mention this, about a 55% move to the upside. And if we do, take a measurement from over here, that's about the same distance, the same shape in that rectangle, but this was about a 75% move to the upside, around 74. And then this one, I'm going to try to drag it over here without adjusting it. We didn't move that high in the past, but we did go up about 70%. So with that being said, maybe, we do have some more room to go higher, which could be bringing price up to, around 70. And that would be right around, let's see, $10 a share, corresponding with that 2,618. So quite the possibility we go up to $10 a share, but I think that would be the last leg before starting to roll over. And with that being said, maybe 774 is on the table. So keep that in mind. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thanks a lot for watching. Take care, you guys.